Welcome students, all of you, in our university, Netaji Subhash Open University, in a session of postgraduate program on indirect taxes. Students, we will be covering today in this particular session the major analysis of indirect taxes in our country, its application and its utility, and our course curriculum covering the subject and syllabus of indirect taxes. Precisely, indirect taxes in our country covers up central excise, customs duty, VAT, that is value added tax, including sales tax, commonly called as central sales tax, and service tax. The purpose or the name indirect taxes very clearly implies that it is a tax which is paid by the consumer, the person who is consuming the goods or services, not directly but indirectly. In other words, it is somebody who is collecting the tax from me and depositing to the government department. In a much simple equation or example, it is a shopkeeper or the restaurant owner collect the VAT or sales tax from my bill and deposit to the government. So, I pay the taxes to the government not directly but indirectly, means the shop owner collect the taxes, and this is the conception of indirect taxes. To begin, our today's program specifically comprises of central excise duty, VAT or central sales tax, service tax, and then customs duty. Let us begin with the main program. Central excise duty, we will have a detailed review of it. In our country, anything that is manufactured is leviable or chargeable with a duty called as central excise duty. In a very easy way to understand, I manufacture anything in a factory which is located within the geographical boundary of India. Whenever the goods get manufactured and comes out from the factory gate, the duty which is paid on that is called as central excise duty. In other words, whatever goods we purchase in any shop, whether it is a soap, whether it is a detergent powder, whether it is a electrical fan or tube light or a bulb or anything which is manufactured in India, at the time of removing from the factory, a tax which was paid on that by the manufacturer is called as excise duty or central excise duty. Okay. And union government, central government is the prescribed authority called as appropriate government to collect the taxes. So, that is why it is known as central excise duty. To levy, come to the subject in detail, to levy taxes or central excise duty on any product which has been manufactured in India, precisely few conditions needs to be fulfilled. What are the conditions? Condition number 1, it should be manufactured. Students may please note this particular point, it should be manufactured in India. So, it is manufactured in India, and then the next is it should have a sellable condition, means it should have a sellability criteria. Sellability means it should be capable of being sold. That means I manufacture something which can be sold out in the market. And then next, the point of levy of duty means when it will be levied, when it will be charged. The point of levy of duty is the point when the goods is just removing out from the factory gate. So, precisely just to recall, goods, there should be a goods to levy excise duty. What are the main points? There should be a goods, there should be a manufacturing process, something should be manufactured. The manufacturing should take place in India. The product should have a sellability criteria, means it should be capable of being sold. And finally, the fifth one is the point of levy, the point of charging excise duty is the point of removal of the goods, when you are removing the goods from the factory gate. These are the 5 points needs to be covered. Now come one by one to understand these 5 points. We speak about goods, that means if I am providing a service, say banking service, insurance, transportation, no excess duty is payable because it is not a goods. Then the second point, which is very very vital, it should be manufactured. And what do you mean by manufactured? That means there should be a manufacturing process, a process where input raw material converted into the output or finished goods. In the legal language, students please note down the word, in the legal language there should be a conversion of the characteristics of the raw material to the finished goods. That means the raw material, it is something like from the steel sheet I am manufacturing almirahs. So, steel sheet remains steel sheet, and then when I cut it, fabricate it, welding, painting, after everything the almirah is getting ready, I tell it is a manufacturing process. Okay. Number of cases are there, what is manufacture, what is not a manufacture, and the Honorable Supreme Court as well as different high courts came out with different judgment on this particular issue. But fundamentally one thing is very clear, that the basic characteristics of the raw material, if it is changed, totally changed, a different product is being produced or manufactured or comes out, it is called as manufacturing. So, manufactured product and the process is called as manufacturing process. Give you 2 examples. It is like a pineapple. If the pineapple is taken out from the agricultural field, cut out all the non-eatable portion, slice it, put it in a container with preservative and sold out in the market, commonly called as dressed pineapple. The law says the characteristics of the pineapple remains constant. It was a pineapple and it becomes, or it remains as a pineapple because the characteristics never changed. Example is make slightly different. The pineapple, in a process, the juice is taken out and the juice is canned or bottled in a separate bottle and sold out in the market called as pineapple juice. Just like apple juice, musumbi juice or orange juice, it becomes a pineapple juice. The law or the different high courts, Supreme Courts, they confirmed that yes, this is a manufacturing, because the characteristics pineapple now converted to pineapple juice. So, to understand the situation in a process where the basic characteristics of the raw material converted into the different product, distinctively different from the raw material one, is called as manufacturing process. That is true. Then whether everything is taxable, everything is dutiable. In our country, if anything being processed or produced in the manufacturing center, that is in factory, whether everything is taxable. Lot of confusion came out, because in a factory there are process costing may take place or processing may take place. In process 1, some product is produced, the end product coming as the raw material of the process 2, then process 3, then process 4, and then the final product goes out from the factory gate. So, whether excess duty is payable at every point of time? Honorable Court says no, because at every point of time, if there is a tax, semi-finished goods, then there will be a multiplicity of taxes, double tax, triple tax, multiple taxes, and then the consumer shall be paying number of taxes, which is absolutely unwanted. So, they say when the product finally goes out from the factory premises, when the goods are finally removing, the word in the law says removal or point of removal of goods. So, point of removal of goods is the point when excess duty is levied or leviable. Okay. A lot of confusion comes out in this particular process, that how to levy excess duty, because once we understood what is the goods and then it is manufactured, it is chargeable to excess duty, everything is fair enough. Then what is the value? Because if it is a sale price, means if it is a sales tax, the tax is levied on the sale value. But if it is a excise duty, means if it is a goods which is being manufactured definitely a question comes out on what value excess duty shall be levied, 12 percentage or 14 percentage as the case may be, on what value the duty shall be levied. Lot of confusion may come out. We go to market, purchase any cosmetic product or any other product, we found out some prices is mentioned on the packet, 100 rupees or but 200 rupees for 100 grams. So, when that product was manufactured in the manufacturing base, on what value excess duty was levied? Precisely two answers are there. There are a number of things, but for the today's discussion we will cover up two areas. One what is called as what is the assessable value. That means to levy taxes, let us find it out what value on which I will levy tax, I will charge tax. Honorable Supreme Court in a number of cases, even the law in number of paragraphs made it very clear that the cost of manufacturing, cost of manufacturing plus the expected profit shall be the assessable value for that particular goods. And that means a transaction value, a value at which the goods are normally transacted, the goods getting, the manufacturing process gets completed, that is the value called as the assessable value, and on that particular value excess duty is levied. That is the second theory which is also applicable. Number of product in the market we find it out, something written on that called MRP, maximum retail price. So, if it is a MRP written on the product packaging, the government publishes something called as a discount, in legal language called as abatement. So, if 40 rupees is the abatement, 100 rupees shall be reduced by 40, my assessable value becomes 60 rupees, 100 minus 40 equals to 60, and on that 60 rupees I will be paying central excess duty. That is also acceptable. A biggest confusion comes out with which excess duty this entire problem becomes so much complicated is what is called as the determination of the valuation or determination of the characteristics of the goods, or in the legal language what is called as classification of the goods, because the central excise duty, the act that is called as Central Excise Act, is backed by or supported by a manual called as Central Excise Tariff Manual. Tariff means rate of taxes, and in which every product in our country, every product is written, and then the tax rate is written side by side. It is called as the Central Excise Tariff Manual. It is basically made on a HSN, the harmonized classification basis. Now, if I say it is a mobile phone, it is a mobile phone, it is a communication instrument. If I say it is an instrument where I can have I can play MP3 player, I can play video games, I can play so many things, I can have a computer access, I can have a data access, and also I can make phone calls, then the confusion may arise, or lot of cases it actually arises, whether it is a cell phone, whether it is a mobile instrument, whether it is a communication instrument, whether it is an entertainment instrument, or whether it is a video game in your hand. Give you a practical example which adjudicated by so many honorable courts of similar cases. Just one example I am citing over here. We have got mirror in our house, or in office, or everywhere, mirror where we normally see ourselves, mirror. A mirror which is placed in our house is a mirror. The mirror which is placed in our vehicle, that is motor car or motor vehicles, is also in the nature of mirror. We see something which is backside. Now, if both are mirror, both are made out of glass, but under central excise classifications are different, because a normal mirror chargeable at a much lower rate of tax, and whenever it becomes a mirror designed for a motor vehicle, it becomes not a mirror but a motor vehicle's accessories, it is chargeable under a different rate. So, similarly, two major area of confusion, students, whenever you go through this entire process of study, two major area, be very careful and very go into the detail. Number one, what is manufacture, what is not a manufacture, number of cases, number of examples. And what is the classification? Whether it should be classified as product A or should be classified as product B. And if 3-4 classifications are there, 3-4 utilities are there, the best possible utility shall be treated as the classification point. Again questions. What is the question? Say in a manufacturing center, whenever I am buying raw material and then in a manufacturing machine I am processing it, getting a finished product. Obviously some amount of scrap comes out, scrap which is not usable product. Say I am buying steel sheet and manufacturing almirahs, tables, etc., etc., and in the process steel corner cuttings, these are coming out as a scrap, and once in 3 months or once in a month, once in 6 months I call a tender and sell out this scrap. So scrap coming out from the manufacturing process, removed from the factory gate. Question, is it also accessible? Because the input characteristics, output characteristics should be different. So number of cases this was argued that whether a scrap generated in a manufacturing process in a factory sold out in kg or quintal or metric ton in a bulk basis, whether that is also chargeable to excess duty. Honorable Supreme Court, there are number of case laws are there. I just cite one. In Khandalwal Metal Works Limited, one of the wonderful, the landmark judgment of Honorable Court, Honorable Supreme Court told, yes, if the scrap has got a commercial value, some value that you are able to realize, if the scrap becomes sellable, students may please note this particular word, sellable means capable of being sold. If the scrap is sellable, it is also taxable, means accessible, and you need to pay excess duty on that. Okay. So, just one definition. What is the manufacturing? Manufacturing including a process incidental. You definitely would get this definition in any book as well as in the study material of the university, but I like to emphasize only on 2 words. Its manufacturing includes a process incidental or ancillary to the completion of the manufacturing of the product. Incidental and ancillary. Incidental and ancillary means any activity which supports the main manufacturing facility is also manufacturing, is also a process called as manufacture. Okay. And there is something called as deemed manufacturing. Also deemed manufacturing means a manufacturing which comes out not directly, but you are deeming, you are confirming that yes, some manufacturing activity are taking place, called as deemed manufacturing process. Okay. One more topic on this and then we will shift to the other side of the indirect taxes. See, whatever we told, that if that 5 conditions